Okay, good morning, everybody. You got my email. Having some technical difficulties over the weekend trying to get these videos done of the walkthroughs of the quizzes. So, we're going to walk through the quizzes today. Probably only have time to get through quiz 1 and 2 today. And then I'm actually trying to still trying to solve the technical issue, so I'm actually trying to record this right now. And then if it works, then I'll post this up as well. So if you want to refer back to it on whenever you can. I copied and pasted some of the quiz questions onto a Word document just because the Connect platform was giving me a lot of trouble over the weekend. So we'll walk through that today. Obviously, since we're slowing down a little bit, the schedule is going to change a little bit in Connect as far as what chapters we get through in the future. So basically, this week and next week, we'll kind of combine as if it was 1 week since we're going over older quizzes. So I haven't changed the dates in Connect yet, but Chapter 4 will be... The quiz on Chapter 4 will be a week from Friday. So we'll review some stuff for a couple days and just try to catch up, make sure everyone's on the same page. I will say, were any of you able to go in and look at your answers and get feedback? Nothing? Okay. I guess I'll have to contact McGraw-Hill and see if they can walk me through that. I have the settings set up so you should be able to do that, but apparently you cannot. Whenever that is activated and it works, you may notice or you may remember, if you have a good memory, when you look at these problems, the wording will be consistent, but McGraw-Hill uses about 5 different sets of numbers. So like the numbers you see may not be exactly what you saw in your quiz, because it just depending on when you log in and get onto the quiz, it will spit out a different set of numbers, but it should be the same process working through the problems. So, with that being said, if you have any questions, let me know. I'm going to try to make myself available as much as possible today, tomorrow, Wednesday. If anyone needs to set an appointment to come and see me. I know a number of you were concerned about either grades or just where you're at so far in the semester, or just want some advice or whatever. So, yeah, I'll try to be available in the next few days. We can get things squared away. Okay, you also notice most of these I didn't put the answer choices in, so we're just going to work through them as problems. Obviously, if you could do the problem without looking at answer choices, you should be able to pick out the right answer if given the choices. Some of them, due to the nature of the questions, I had to leave the answer choices in. Okay, so this is Chapter 1. Oh, and by the way, I'm trying to record this like I said. I'll also, as we do the answers, I'll save a copy of this at the end with all the answers on it, so you should be able to access that as well. Okay, so problem 1. Can everyone see that in the back, by the way? Yeah? Back row, give me a nod or you guys are good? Okay, cool. If a company is considering the purchase of a parcel of land that was acquired by the seller for $92,000, it's offered for sale at $164,000, assessed for tax purposes at $102,000, recognized by the purchaser as easily being worth $154,000, and purchased for $151,000. The land should be recorded in the purchaser's books at what price? Okay, so this is the cost principle, which basically says unless there's some exception that you would have seen otherwise, you always record purchases at cost. So all these other numbers that they threw in there besides this one were all what I call, or what is called, a red herring, which is something thrown in there to confuse you or get you thinking about what you're not supposed to think about. Okay, so 151 is what you purchased it at. So the rest of this stuff is totally irrelevant when talking about what you're going to record it on your books at. Anybody have questions on that one? Okay, pretty straightforward. As long as you knew the cost principle rule or could look it up, should have got that one right. On August 31st of the current year, assets and liabilities of Gladstone Inc. are as follows. Cash, $28,650. Supplies, $840. Equipment, $9,000. Accounts payable, $7,800. What is the amount of owner's equity as of August 31st of the current year? Well, to be able to do that, what do you need to know? You need to know the basic accounting equation. Assets equals liabilities plus owner's equity. Okay? And then you need to plug in what you're given there. So we have 28,650 plus 840 plus 9,000. That's the asset side, equals 7,800 plus, I put in X there for owner's equity. So all you would have to do is a little bit of algebraic manipulation there and move this 7,800 over to the other side, and you'd be left with what owner's equity is. Okay, so in the end, you've got 28,650 plus 840 plus 9,000 minus 7,800 equals owner's equity. You can, whoops. Okay. I'll just pull a calculator up. Too early in the morning to do math in my head. Is what? Yeah. It would be 28,650 plus 840 plus 9,000 minus 7,800. What is it? Okay. So did you have a question on how that was that? So just by manipulating the basic accounting equation, assets equals liabilities plus owner's equity, all of this is your assets, this is your liabilities, owner's equity they don't tell us anything about, so we assume that's whatever's left over. So you see how I set it up that way, or are you confused on how I manipulated it?
Yeah, I did. I just forgot.
Okay, cool. Anybody have any questions on how to do this? See a couple of confused looks. As far as getting from the problem to the setup? So, I mean, you have to be comfortable enough with the concept of what the basic accounting equation is to be able to go from the words in the problem to the equation that I set out there. Okay? So if you learn nothing else in the first few weeks of this semester, knowing and internalizing the basic accounting equation is like number one. Yes?
Is there any way that we could go in and change like some of our assignments to problems like these that
Yeah, I mean, I can add assignments like that, or I mean, all the stuff in the back of the book at the end of the chapters are questions like these. And if you want to just do those as practice, I mean, I hate to add extra work for everyone that you have to do. Well, I mean, like the Learn Smart deal, well, I mean, I can stop assigning those. but I can't change the problems that are in them because they're tied to what McGraw-Hill has done as far as computer programming to try to tie certain questions to the reading. So that's their little proprietary formula. So I can't really edit the questions that are in there, other than it gives me the option of choosing how long I want the assignment to take. But if anyone wants to do stuff for practice, I think I'm checked, but for most of the instructor sets of the books, I can get the e-copy of the answers from the end of the chapter. So if you want to do some of those and say, hey, will you send me the answers for this chapter, whatever, and I can do that. Okay. Any other questions? And also, on normal weeks, again, doing the Wednesday questions in class are going to be me just pulling the quiz questions, basically. So, I mean, I know you didn't have that opportunity for chapter 1. So, any other questions on this one?
So assets could be as many assets as the question.
Yeah, I mean, it could be, and in reality, this is probably an abbreviated list for any company, but yeah, as long as the question lists out all of these different asset accounts, it could be whatever number is in the question, right? Or the number of asset accounts really doesn't matter. The thing that matters is knowing, well, two things in this question. You had to know this equation, and you had to know where to put the various accounts. So you had to know cash is an asset, supplies are an asset, equipment is an asset, accounts payable is a liability. So if you know those two things, you should be able to set this up. Okay. Okay, Zippy had cash inflows from operations 70,500, cash outflows from investing activities 55,000, and inflows from financing of 33,000. Okay, so this is information that you would see on the statement of cash flows, and basically it's asking what's the net change in cash. All you have to do is add up the inflows and subtract the outflows, and that's the net change in cash. Okay, so we had 7,500 inflows from operations, 33,000 is inflows from financing minus 55,000 outflows from investing activities, and we're left with 48,500.
You had the 33,000.
Yeah. So wherever it said inflows, I added. Wherever it said outflows, I subtracted. Okay. Doesn't matter which category it is. Just if it says inflows, that means money's coming in, cash is coming in. Outflows, cash is going out. Okay. So the statement of cash flows in this case would have taken you from a beginning balance of whatever it was. For simplicity, let's say the beginning balance was 0. At the end of the period, this is how much would be in there, because you increased cash by 48,500. Okay? Any questions on that one? Okay. The company's balance sheet shows cash 30,000, accounts receivable 20,000, office equipment 54,000, and accounts payable 21,000. What is the amount of owner's equity? That's the exact same type of problem that we did for, what was that, number 2 back there? Okay. So again, this is asking you to be familiar with the basic accounting equation. Assets equals liabilities plus owner's equity. Okay, so cash, 30,000 is an asset. And they list them in order. You'll notice that. So they list all the assets out first, then the liability, So 30,000 plus 20,000 plus 54,000 equals 21,000, which is your only liability in this case, plus the what we're looking for, X or owner's equity. Okay? So, again, all we have to do is add 30,000 plus 20,000 plus 54,000. That's 104,000. Then we move the 21,000 over from this side of the equation by subtracting 21,000 from both sides. And we're left with 30,000 plus 20,000 plus 54,000 minus 21,000 equals 83,000. Questions? You guys solid on that concept now? Okay. If Houston Company billed a client for 28,000 of consulting work completed, the accounts receivable asset increased by 20,000 or 28,000, and okay, I think I should have put the answer choices in that one. Okay, we'll skip that one for now. Well, without the answer choices, we can still reason this one out, okay? So this is basically asking, if this transaction occurred, you billed a client for $28,000 of work completed. That completed tells you that you've done your job. You don't have anything else to do, so you've earned this money. So if you were doing a journal entry, whoops. All right. You'd have a debit to accounts receivable for 28,000 and a credit to some type of revenue account for 28,000. Okay, and if I remember right, the answer choices were various different accounts. One of them said some type of revenue, 28,000, increases revenue by 28,000. Okay, so this journal entry shows you that accounts receivable money that is owed to you is increased by 28,000. In addition to that, your revenue account is also increased by 28,000. Okay, so if I remember right, the actual answer choice said revenue increased by 28,000. Any questions on why that is? Okay, the key to that question phrase is completed. Okay, if you had not done the work yet, well, first of all, you probably wouldn't be sending a bill. But if you had not done the work yet, then it would not be considered earned revenue. Okay. If assets are 110,000 and liabilities are 37.5, then equity equals what? Again, a simplified version of assets equals liabilities plus owner's equity, and all you would do there is 110,000 minus 37.5. Okay, because assets equals liabilities plus owner's equity, and this is your liability, and you'd want to subtract that from this side to leave owner's equity by itself. And what is that? 82.5, 72.5. Sorry. Like I said, too early for math. Any questions on how you set that one up? Only difference between that and the first two we looked at is you didn't have to add up the various different asset accounts. They gave you that information. Okay, if a company receives $12,400 from the owner to establish a proprietorship, the effect on the accounting equation would be what? Okay, so, well, I'll give you a couple ways to look at this. easiest way is just to look at it as a journal entry. What would the journal entry look like to record this happening? Okay, the owner of the company is contributing capital to the company, $12,400. Well, if the owner gives the company money, what does the company have more of? Money, right? Cash. So cash would increase by that amount. And let's see, we're not given the owner's name. Owner's equity would increase, and you would typically have the owner's name there. So in my case, if it was me, Momfeld equity account would increase by $12,400. So you have an increase on the asset side, increase on the owner's equity side. Any questions on that one? Charlie's Chocolates owner made investments of $88,000, withdrawals of $39,000. The company has revenues of $121,000 and expenses of $83,000. Calculate its net income. Okay, so these numbers here, again, red herrings. Those are not relevant to calculating net income. The only thing that's relevant to calculating net income is revenue and expense. Okay, statement of or income statement, all revenues minus all expenses equals either net income or net loss. Okay, so you would just have 121,000 minus 83,000. Okay, and that would be what, 38,000 net income. Any questions on that one? Okay. Again, beating this one to death. If assets are 299,000, liability is 191,000, what is equity? Assets equals liabilities plus owner's equity. 299 equals 191 plus OE. 299 minus 191 equals owner's equity, which in this case would be 108. Any questions on that one? Okay. Should be, at this point, fairly straightforward. Dawson Electronic Services had revenues of $84,000, expenses of $52,000. Assets at the beginning of the year were $402,000. At the end of the year, assets were worth $452,000. Calculate its return on assets. Okay. Actually, I'm going to skip that one for now. Only because all of these, I'm not going to spend a lot of time on the ratio ones because I assume that you all can plug into a ratio. Yes? If you can look up the ratios and plug in numbers to the top and the bottom, these ratio ones should be just gimmies. Okay? So I want to at least get through the first two chapters today. If anyone has questions on how to plug into a ratio, now is your time to ask. If not, we'll skip those.
Does that net income over net sales? Is that the ratio here?
Okay. But again, I don't want you guys to memorize any of the ratios. Okay, I memorized the ratios for the CPA exam, and that's it. Okay. If you're not taking the CPA exam, don't memorize ratios. You'll have them in your book. Yes, sir.
You want me to ask you, because a few of my buddies took the test. How many times did you take
For which section?
all four?
I took, let's see, which one did I fail? I failed audit.
Why
That's the other
why do you study for like 3 months? I went past 2 of them. I had to do the other 2.
Yeah, it's a hard test. I think the pass rate is like, all 4 sections on the first try is like 12%, something like that. Yeah. It's hard, it's especially hard if you're trying to work and have a family and stuff and do it. But Yeah, it's no joke. Anyone who's taken the CPA, worst. Let's see, it took me about a year to study for them. Worst year of my life, basically. Yeah, but that's why pretty much most of my classes are all open book, because the only time you ever need to memorize this stuff is if you're taking the CPA exam. Otherwise, even when I was working as a finance director, I never tried to memorize anything. I wanted to look up everything because I wanted to be sure that I was getting the right answer, right? Okay. Company reported total equity of $179,000 at the beginning of the year. Company reported $244,000 in revenues and $182,000 in expenses for the year. Liabilities at the end of the year totaled $109,000. What are the total assets of the company at the end of the year? Okay, so revenues and expenses for the year would have changed. That was only relevant to the statement or the income statement, right? So revenues and expenses, if you're asked a question about assets or anything that's on the balance sheet, basically, you shouldn't worry about that stuff. So we got red herrings in this one as well, right there. Let's see. Oh, I'm sorry. We actually do need that one for this one. Only because it gave us the beginning year equity, and we have to calculate the end of year equity to match that with liabilities at the end of the year. Okay? So the only change in equity here is whatever we added to equity based on the net income. Okay? So step one here, calculate net income. So that is 244 minus 182, and that equals 62,000. Okay, so that means equity increases, by 62,000. Okay, so beginning year equity was 179. We have 62,000 added to that. And that equals 241. Ending equity. Okay. Once we have ending equity, assets equals liabilities plus owner's equity. Assets equals ending year liabilities. We're 109. We just calculated ending year equity. So assets equals 350. Okay. So again, I needed to know, first of all, I needed to know how the income statement affects the balance sheet, okay, or the basic accounting equation. Revenue and expense total together to either increase or decrease owner's equity. They gave us the beginning of the year owner's equity. We used the net income to increase owner's equity by 62,000. Calculate the ending year owner's equity. Once we had that, then it was exactly the same as those first three problems that we did. We're given two of the three components of the basic accounting equation and expected to basically use algebra, although in this case we didn't have to manipulate anything. All we had to do was the math, addition. Yeah? Okay, so liabilities of 109 would be subtracting if you were just looking at calculating owner's equity. But in this case, the X, or what we're trying to calculate, is assets, right? So if you look at this part of the equation, assets is already on its own on one side of the equation. right? And the only reason before that we were subtracting all the time with liabilities is we were trying to move the L from this side of the equation to this side. So we subtracted both sides by whatever liabilities were. In this case, all we have to do is follow exactly what it says here. We're trying to calculate assets, so all we do is add liabilities plus owner's equity, and when we do that here, we get assets. Okay? Any other questions on that one? Alpha Company has assets of $636,000, liabilities of $268,000, equity of $368,000. It buys office equipment on credit for $93,000. What would be the effects of this transaction on the accounting equation? I don't remember what the answer choices were, so I don't know if it's asking us to actually calculate what, after that transaction, what each component of the basic accounting equation would look like. But just asking at its most basic, what would be the effect of buying office equipment on credit for $93,000? Well, what would that look like? What would we increase? An account called office equipment, which is an asset. We're buying on credit, so this is some type of payable. We'll just use the generic accounts payable. So assets increase, liabilities increase, both by $93,000. Okay? So just basically, do you know how that affects the basic accounting equation? Both sides increase. And if the question was wanting you to give the total numbers of each category after this transaction, well, you would just add $93,000 to the assets and add $93,000 to the liabilities. Okay. Another one of these, assets of a company, $730,000, liabilities, $215,000. What is total equity? $730,000 is assets, $215,000 liabilities. X, or owner's equity, is what we're trying to calculate. And we're left with $515,000. Same as what we've been doing, right? So basically, if you knew how to do this type of question, you got a third of the quiz right. Obviously, if you didn't know that, that would have hurt you pretty badly. If a company purchases equipment costing $3,300 on credit, how does that affect the basic accounting equation? Just like the one we just did. Debit equipment, $3,300. Credit, some type of payable. Again, it probably was not asking for the journal entry. I just put that up there so you see what it is. But the journal entry shows an increase to an asset account, an increase to a liability account. Both by $3,300. Okay. Finally, if the assets of a business increased to $113,000 during a period of time and the liabilities increased $79,000 during the same period, equity in the business must have done what? Same type of deal. Although this isn't telling us the totals, we know that whatever happens to one side of the basic accounting equation has to happen to the other side. So in this case, what did we do? We raised one side by 113. What does the other side have to do? It has to be raised by 113. So you could do this the exact same way as if these were the total numbers in the assets, total numbers in liabilities, total numbers in owner's equity. So it's the exact same question. 113,000 equals 79,000 plus X. Oops. What is that? 34. Okay, you guys should be experts at doing that particular type of question. Any questions on this? Okay, that's quiz 1. Apparently we're not going to make it through to quiz 2. I'm going to start quiz 2 and we'll go from there. We'll pick up on Wednesday with whatever we haven't gotten through, so we'll probably just finish up quiz 2 and quiz 3 on Wednesday. But let me do a couple questions real quick on quiz 2.
Are these going to be available on the file?
Mm-hmm. Yeah, I'll save the quiz 1 that we just did. I'll save and throw it up on Canvas today. Quiz 2, we won't get through all of it, but on Wednesday I'll save it and throw it up there as well. Okay, Gigi's Bakery had total assets of $441 million. Total liabilities, $118 million. Oh, this is a ratio question, so I'm going to skip that one. Mary Martin, the owner of Martin Consulting, started a business by investing $53,000 cash. Identify the general journal entry below that Martin Consulting will make to record the transaction. Well, obviously I didn't include any choices here, but we'll just do the journal entry. So again, this is similar to one that we had in the first chapter. This is the owner of the company investing capital in the company. So the owner is giving cash to the company. So again, we're doing this from the perspective of the company. So cash increases by $53,000. Typically, that's how you write a capital account for an individual person, assuming that there's only one Martin that owns this company. So we'd have credit to Martin's capital account for $53,000. Okay. Any questions on that one? Okay, at the beginning of January of the current year, Little Mikey's catering ledger reflected a normal balance of $61,000 for accounts receivable. During January, the company collected $16,600 from customers on account and provided additional services to customers on account, totaling $13,400. Additionally, during January, one customer paid Mikey $5,900 for services to be provided in the future. At the end of January, the balance in the accounts receivable account should be what? Okay, this is a situation where it probably would be helpful to use a T chart, okay? Because we basically have a bunch of stuff happening in one account, okay? So, let's say the beginning balance is $61,000. We'll leave that up there. And then we added what? Okay, during January we collected $16,600. That's subtracting. Okay, we provided additional services to customers on account, totaling $13,400. So that's added to our accounts receivable. That's what people still owe us. Mikey paid $5,900 for services provided in the future. That has nothing to do with accounts receivable. That again is a red herring. If Mikey pays us for something we haven't done, he doesn't owe us any money, so obviously we're not going to put that on the books that he owes us money, but that's a completely unrelated transaction. Okay, so we basically added $13,400 and we subtracted everything that the company collected during that period, so 16,600. So we just have 61,000 plus 13,400 minus 16,600. And we're left with 57,800. Okay, so really there were two tricky parts of this question. One, knowing from reading the question which dollar figures on there increased accounts receivable, which ones decreased accounts receivable, and whether or not that 51 or 5,900 for Mikey had anything to do with anything. Okay, so as long as you knew those three concepts, then it became a simple math addition question. Okay, any questions on this one? Yes, sir.
So when you provide additional services, you don't account that until it is.
So this would definitely be accounted for in your accounting system, right? But since, if you think about it, when you provide services to someone, well, first of all, the 5,900 is services you haven't provided yet, right? So if he pays you in advance for services you haven't provided, you owe him something now, right? He doesn't owe you, you owe him, right? So we talked about that before, and that's the case of you would record the cash coming in, and you would also record a liability that we call unearned revenue, that basically said, hey, in the future, I'm going to have to do something for Mikey. So I'm going to definitely record that transaction on my books. It just doesn't touch accounts receivable at all, because accounts receivable only reflects what other people owe us. Okay? Any questions on that one? Try to do one more here. Okay, a bookkeeper has debited an account for $6,500 and credited a liability account for $3,500. Oh, hold on here. Okay. Which of the following would be an incorrect way to complete the recording of this transaction? I did include the answer choices on this one. Obviously, that would be difficult to do without the answer choices. So, let's see. Bookkeeper debited an account for $6,500, credited a liability account for $3,500. So, before we look at the answer choices, let's just write that down to show what was done here. Debit $6,500, credit $3,500. Without even knowing what types of accounts they are or anything, just based on the debit and credit there, what do I know? Well, I know at the end of the day, whatever this transaction is, it has to balance equal number of debits, equal number of credits. So right now we're missing $3,000 worth of credits, right? So we can say this one right here is definitely not it, right? That's the only one on there based on the information we have so far that you can say definitely is not it, because if you did that, then it would just be further out of balance, right? So with the information we have, that's the only way we can answer this question. But it is enough information to answer it. Debiting the account, any account for $3,000 would make that transaction be out of balance. Okay, we'll stop there for the day. We'll pick up from here on Wednesday and hopefully finish out this chapter and chapter 3.